Hello and welcome to this latest episode of Winning with Anti Fragility, brought to you by Mint and Automation Anywhere. I'm your host Gautam Srinivasan, and today I'll be speaking with a panel of leaders on the topic of taking the next leap transformation to enhance CX and combat security challenges. Now, before we begin the Q&A, let us look at this massive transformation that has taken place when it comes to customer journeys in the Indian financial sector, especially during the pandemic. Branchless banking has taken off with more interactions between banks and customers taking place online. KYC is being done entirely on digital channels. Insurance claims or loan applications are being processed at a fast pace using automation. AI-powered wealth management tools are providing more sophisticated inputs to users, while analytics are helping to prevent fraud. The list keeps going on. Now, powering these use cases and many more critical tasks is robotic process automation, which is proving to be a game changer from the back office to the front office for financial institutions, while keeping costs low and maintaining effective security of data. So today we will explore the next big leap for CX that follows this revolution of workflows powered by automation, and explore how to deal with the challenges that come with it. It's time now to introduce you to our panel that features Haresh Hiranandani, who heads digital transformation and is SVP at Kotak Mahindra Bank; Murli Mohan Rao Mandua, CTO at DCB Bank, also is with us, and joining us with him is Tupendra Bhattacharjee, who heads digital marketing at RBL Bank, and Milan Sheth, EVP at Automation Anywhere. Gentlemen, great to have you with us for this virtual discussion on the possibilities and challenges in store when it comes to enhancing CX and combating security challenges. I look forward to hearing your insights on everything from managing growth to controlling risks using the power of technology. So Haresh, let's start with you. Kotak Mahindra Bank has championed a digital first strategy well before the pandemic. Now take us through how that foresight helped the bank quickly respond with digital solutions such as video KYC or e-sign or digi home loans, and more importantly, how were systems geared to handle a surge in customer queries while maintaining effective business continuity?
Yeah, thanks, Gautam, for the lovely introduction. And yes, Kotak has always been a customer-focused digital bank. The vision of the bank had always been going digital, and that's why multiple investments, right, from 2014 have been made around this mission. The sudden surge of queries that you saw in the pandemic were effectively met by these multiple digital solutions which we were learning with, because AI/ML doesn't happen overnight, and we were putting this in place, learning, coming up, mastering the art on that. And what happened is our mobile app and our Kia chatbot actually helped us manage the surge of queries that just came in, because the customer couldn't walk into branches or could call the contact center. And what's happened there is we've also used our workforces to enable the amount of queries that could come in. Previously, when a customer would call a contact center, what type of query would come in? And all that we fed in into our AI/ML engines or the AI layers, and enabled our mobile apps plus our Kia chatbots to answer them. And our mobile app has always been about 100 plus about 4-5 years back, and reaching about 250 plus features, enriched features, which is actually helping the customer sitting at home with his convenience, just responding or processing a request. So from a perspective of the pandemic, I think we were just getting ready for a digital organization, and the pandemic happened. So that's how we've met it. And the video KYC, Deepak also mentioned in previous meetings, is that we've seen a surge on video KYC. See, that's become a life enablement for sales, because if you can't visit the banks, how would you open accounts? And that's increased adoption for us.
Absolutely. And since I mentioned, time is on your side, considering you made that early move, you had the opportunity to harness a lot of data using AI and automation and present a better CX to your customers. I guess that's the key takeaway there. Fair point taken. Tapendra, let me come to you. In the conversations that I've had with Shanky and Abhijit about digital first efforts at RBL Bank, from the lens of managing risk and managing growth, especially as the customer base at RBL Bank grew from, I believe, 1.5 lakh to 85 lakh in just 10 years via a host of digital initiatives. Now, one point Abhijit had mentioned was that RBL Bank looks at leveraging digital for customers by going back to the drawing board sometimes and seeing what can go wrong from a customer's perspective. So, how has that approach helped RBL develop a deeper connection with the customer?
Thank you, Gautam, for having me here. So you're right. I mean, while Shanky and Abhijit would have already spelled out the entire perspective in terms of how we work digital first, every objective that we have with the customer, which is digitally driven, is actually a bottom-up development. And when we talk about bottom-up, is where we actually reach out to a customer, understand the need, and then start building rather than build first and then go to the customer. So that is typically been our ethos for the last 7 years in terms of the way in which the design principle has been developed. Now, okay, this is better, I mean, well said so far, but having said that, just to prove the point, there's certain things that we kept developing during our pre-pandemic days, which actually helped us big time during a scenario when contactless became prevalent full hog, was, various branch transactions that used to exist, which were pure branch level, physical, paper-based transactions, which we were converting into customer journeys which were digital. And they were delivered through either the retail net banking or the mobile app. So that is something which, that process itself, which fructified into multiple customer journeys, which used to be these branch transactions, which showed on the mobile app, actually helped the contactless scenario manyfold. For example, submission of a form 15GH. Okay, this is a pure branch transaction where somebody has to come to the branch, fill in the form, and deposit the form. Okay, now in a scenario where branches were thinly placed, lockdowns were there, and there was a situation where people couldn't move out of their homes or wouldn't move out of their homes, we saw a sudden spurt of almost 95% of the submissions happening through the mobile app once we actually moved to production. Similarly, there were other things like re-KYC, which is again a critical physical transaction per se. That was again another one which we moved to the mobile app and enabled the customer to actually do it from the comfort of their homes. So things like this, which are very small changes in the overall space and moving into a digital journey for a customer, has actually helped the customer and enabled the customer to provide for contactless banking. And contactless banking, while it has actually seen a spurt during COVID, during the lockdowns, and we have seen a lot of heightened adoption happening during that period, but most of it has now become a habit, and there is a lot of habit formation which will stay. So now, given that scenario, the more and more we see that happening, more we now have started developing transactions which are of this nature, where we can actually offset the branch transaction into a digital first transaction. And trust me, there being a bank by ourselves, that itself becomes a very difficult normal to actually move from paper to digital per se. We have had enough and more challenges to convert these processes into a digital first process. Okay, because there is a whole lot of regulatory interpretation which is there around these pieces. And
I want to bring in managing risk as a challenge here, Tapendra. And because Shanky had said that banks are in the business, I want to bring the point of managing risk, since you mentioned challenges. And Shanky had said that banks are in the business of managing risk in the process of storing and distributing money, whereby the importance of digital initiatives will now be on using data to serve the unbanked. And, I want to give an example of, and he actually cited this example of, say, how do you give a credit card to someone who has no credit history, for instance? So I want to understand from you, how do you see automation of data helping you gain customers who might not have been even showing up in the radar early, and how do you tune the CX accordingly? Because as you said, you understand the customer first and then you build the solution later. So I want to understand your viewpoint on this.
Sure. So, okay. So following from where I was mentioning, that these are the ways in which we have been automating most of the processes. And like in terms of managing risk is where I was also trying to explain that, it is more about the interpretation of the regulatory risk as well as the financial risk that we entail during this movement. And one of the risks which you are highlighting, which was mentioned, is how do I lend to a customer who does not have a credit footprint currently? So given that there is a lot of behavioral data that we have been accumulating over a period of time based on the digital transactions that have been happening over through the channels, the behavioral analysis of a customer has been spelled out in this data set. And given that we understand the behavior, there are a whole lot of alternate variables of risk assessment which has come down, has emerged during this period. And these new models of displaying these variables or using these variables to create products around it, and therefore using or removing the traditional variables or offsetting the traditional variables to lay out better credit risk around it is something that we have been managing with the data that we have. Now, given that we have this data, what we also have done is that these models proactively churn out the customer base in form of the eligibility, not only from the income information, but also spend, where spent, which address, how much time are they spending in various places, and so on. So this is what I meant by alternate data which is coming in. And that alternate data stream actually helps us create these models, which have to, of course, sharpen more and more. But in today's date, are being used to actually improve and build on the CX, where we are building the customer base, which is not otherwise, which are not otherwise banked to that extent. So that is when we're talking about the less banked scenario. Yeah.
All right. Let's see how automation helps in sharpening these models, as Topendra put it. Milan, let me bring you in. Mitigating current risks and preparing for future threats can indeed help build the right foundation for success and growth, even in uncertain times that we're presently seeing. So I want to understand from you, how can financial institutions leverage the power of AI for better risk modeling?
Yeah, thanks for having me, and good to connect with everyone. So I think both Topendra and Haresh briefly touched on the risk aspect of it. So there are two elements which we've typically seen in banking world is the entire control and compliance is something which is so integral, and when it is integral to your entire processes, any technology which you deploy, whether it is AI or automation, will have to reflect that element. So just an example, that you are processing a corporate action in an institutional bank, or you are doing in a retail bank a KYC per se. How can an AI model or the automation model can standardize your process, and then if you can build a supervised learning on top of it, it at least starts showing you all the exceptions, which today are done by human eye. So I think if you are able to supplement that human effort with an automation or an AI, I think it helps you from a risk modeling on a process perspective. The second kind of element is, and you use the word risk modeling, but the second element is also in terms of the non-availability of people, the ability to capture the integral knowledge in the process itself. It is no longer residing in the brain of a person who does the process. And I think that's another aspect where, if I look at the global banks, they are creating this incremental layer that all codification happens of a process. So when do you give exception approval? What are the routing which will happen if certain data sets are incomplete and so on. Now, historically, workflow applications did it in banking, and I know that Murli, Topendra, and Haresh can speak a lot more authoritatively on that than me. But I can say that there was still an element of manual control which was kept outside, and I think that is where both automation and AI can really supplement that effort, alerts and so on and so forth. So it's a fascinating topic. We always discuss this. We have more examples coming from all these leaders and all in the banking world. I want to give one more real life example. Is one of the customers which does a large amount of NFO processing. Right, there is an NFO boom in the country right now, whether it is mutual fund or IPO or whatever. Everybody is applying it. So the ask was that we had to process 2 million documents in 3 days time, uh, and because you had to get all the money in. Now I think automation AI played a big role, but the risk element I thought that automation could bring about is this deduping and validating that the same PAN card, how many applications have been made, same address, how many applications have been made. Some of those rules, automation can really help. So, I mean, couple examples I can cite. I'm sure many more will hear, but that's kind of an initial reaction to your question.
All right, taking your point forward, Miller, over the course of our many talks that we've had and explored how RPAs have worked in the background to ensure a seamless banking experience, whether it's from paying a bill to applying for loans. Are RPAs helping incumbent banks with legacy infra close the gap with neo banks? And if so, how? How is that happening?
Yes, I think if I may just give a quick example that RPA today is deployed in some of the largest global banks, and one of the reasons for that is the incumbent or legacy infrastructure which you referred to. I don't see that in Indian context, whether all the three banks which are here on the panel, they all are very sophisticated, have adopted very largely sophisticated set of systems. I think the RPA adoption or AI adoption in India is, in addition to legacy application, there are two more very critical part. One is the speed, and the second is scale. That uh, are you able to roll out pan India set of processes across your branch in a very shortest possible time, which is very difficult to do in a traditional software rollouts which have happened in past. And second, can you scale using cloud ideally as at a lower cost? So I think, in my view, Gautam, it's legacy is there, and there are use cases and processes where legacy gets replaced by RPA. But the real, in my view, the angle is speed, the growth. I think you referred to RBL's growth volume, and I'm sure same with Kotak, same with DCB and others. So growth is so fast that how can you really respond with speed at lower cost using and scale it as fast as you can.
All right. Another aspect of that growth and speed is, of course, is security. So let me bring in Murli to discuss the security aspects. Now, Murli, the RBI has provided guidelines around digital payment security controls to strengthen the digital payments architecture and improve security, control, and compliance among banks, gateways, wallets, and other non-banking entities. Now, in an earlier chat that I had with Prasanna Loar, who heads digital innovation at DCB Bank, we had discussed the need for thinking about security not just from the bank's perspective, but also from the entire financial ecosystem perspective. So, in your opinion, how should banks and the broader financial ecosystem deal with security challenges currently, and looking to the future, if 5G comes in, say, in the next 2-3 years, and form factors of transactions between banks and customers themselves change, how does the security aspect then transform? So what's your view on this? Murli, I believe you are on mute. If you could unmute yourself.
Oh, sorry. Thanks, Gautam, and good evening to all. I think it's an interesting topic in terms of the security, especially in the last 14-15 months when we have gone into this pandemic area. I think largely every industry, including the financial industry, has come into the digital first as one of the key items. And under the context of digital first, I think we looked at three main pillars. One, how do you get your customers onboarded? how do we enable them to do the digital payments, and how do we provide services which are non-financial in nature, right? So in all these three aspects, if you look at the with the UPI and NEFT RTGS coming into the picture, the payment ecosystem has kind of relatively matured. But in terms of our customer onboarding or other financial services, this is where the scale has come in, whether it has pushed the whole industry in getting into a self-services or a digital services mode. So in all this context, Gautam, I think the data becomes the key item for it, because the data that is getting transferred between different applications, because we are providing services online, self-services. And second part of it is that the data that is created and has been put onto the servers, or put onto your secure file servers, etc. The third is the data which is in use, right? In all three aspects, the data security becomes one of the key item, because everything and anything that you build upon it is based on a data that you have, or data that you are getting it from different systems as part of the whole interfacing ecosystem. And that's where the context of data security does not just be within the bank network or within the intranet or something. It cuts across the ecosystem to the service providers, and to the place where it is getting executed. So the way that we look at the overall security principle is that you need to identify what is the kind of a sensitive data that you have, what kind of, you need to categorize different parts of your data, what is based on the confidentiality, etc. Second is who is having the access to those data, right? So what kind of privileged monitoring systems or controls that you have put it in, and that what is really defines in terms of who is given access to use the data. The third point is that where the data is stored, right? In terms of your endpoint devices, in terms of your servers, and how are the controls that are getting created. So this is one broad area in terms of the data which is in use. Second is the data which is in motion. So primarily when you are doing in a continuous journey, when you're creating a continuous end-to-end seamless journey, the data is being federated from one system to the other system. So it is of a paramount importance that the data is one secured and it is given in the right way to the other application. So data in motion is a key item, because otherwise the data gets that the data could be manipulated, and it could be it could give it could end up into giving a different kind of results. So there are different patterns, like typically people use either an SSL encryption to ensure that the data is encrypted in both the ends, and a private communication. You also deploy at a network layer the TLS protocols to ensure that the encryption is done. This is in terms of application to applications. When it comes to the ecosystem, we know that there are different new age patterns that are coming in terms of an API aggregator, the marketplace creation that is happening, where we are dealing with multiple fintechs, right? It becomes another area of vulnerability, where the data is coming from not within your ecosystem, but it is coming from an ecosystem which is outside to your system, and you do not have much of a control in that that in that space. So again, it becomes an important item for you to ensure how are you exposing your APIs for consumption to the ecosystem, what kind of a middleware you're creating, and what kind of an authentication mechanisms that you're creating on it. And it is not only from the to ensure that the right person is given access or privileges to use the API, and also the right data and the context is getting shared between those two applications. So
all right, adding to the point that you mentioned there, how do you make security frictionless then? How do you make it invisible? Because if data is in motion, and we see a lot of applications moving to the edge when it comes to financial services and the interaction between, say, banks and customers. In that respect, from DCB's experience, how do you make security frictionless then?
The principle that gets followed is, I think, as I said, in two areas. the data that is being federated between systems gets encrypted either using your SSL protocol as well as the TLS protocols to ensure that the data is not getting transformed on a clear text, right? The second is that there is another data that is the element that is getting stored in your database. How are you ensuring that the data is not getting is not clearly readable to any other user other than the access privileges that are given to that specific a specific context. So I think in these two principles, what you do is that the algorithms that you follow, either in terms of your encryption algorithms or the TLS protocols, will help you in ensuring that the data is getting transformed without any friction over there, right? There is no specific gap in between those two processes.
All right, let's try to now understand how technology can be leveraged to improve customer experience at different stages of the journey. Topendra, I'd like to bring you in, right from creating brand awareness to buying products or services and evaluations about the quality of service. How do you use technology to improve customer experience? If you can give us sort of key elements and answer from the perspective of key elements involved. So for those who are watching, that could serve as a reference point.
So I would want to continue from where my co-panelists have been speaking about data. And I think that's the most important element in today's date, given the way we stream data across various digital applications on which the customers are actually living out of. So right from the selection process of the product at a marketplace level for a customer, to till the time he's being managed inside the bank, the entire life cycle in today's date is tracked and managed through the various ways in which data flows in. And therefore the entire AI engines that are working around and in various spaces, and the machine learning which is happening across different stages of the customer life cycle, actually helps us provide various services to the customer at various levels of his life cycle to ensure that one, it is top in terms of experience, two, it is top in terms of engagement, and three, it is trustworthy. So when I say experience, what I'm saying is that the CX layer, which powers the interface between the customer and the bank, is supported by a lot of data, the data models, which actually support on what he needs to see on a screen. So if you look at my mobile app,
and there seems to be a bit of a lag, unfortunately, when it comes to Topendra's connection. So we'll see if we can get him back on. Topendra, are you back on with us? If you can hear us?
Yes, I am.
Sure.
Yes,
we're just seeing a bit of an interruption in terms of a video quality. I believe you're back on right now. Sure. Go ahead with the point that you were mentioning.
Yeah, so I was saying, if I take the mobile phone as the glass, and if I talk of the top layer, which is the top of the glass, which is the interface between the customer and the bank. Now there, the data, the usage of behavioral data is more to show him what he needs rather than show him everything that we have. So that makes a personalized offering to him, and that is something which is done through our homegrown recommendation engine, which typically is the objective is to reduce decision fatigue out there, or rather cluster him with a lot of features, etc. So that is one point. The second layer, which is the engagement layer that I'm talking about, where we, based on his behavioral information that comes in, we use and churn that information to figure out what is his real need, and therefore produce and create more and more either the feature set or even the product that I'm offering to him. So this is the second layer that we're talking about. Also includes variables, which are alternate variables, which I spoke in my last piece. Is that this is where I try and create products which are from these alternate variables, typically variables which are not non-traditional, non-underwritable, and so on. The third one, which is the trust layer, which is critical, and which is what Murli was alluding to in his piece, is very
All right, the trust layer is what is
going
key.
digital.
So we lost you again there, unfortunately, Topendra. If you can talk
Yeah.
more about the trust layer that you were talking about.
Yeah. So in the trust layer that we're talking about, which is the third layer, the trust layer is critical from a perspective that yes, the security of the transaction is very important. Parallelly, that should not infringe into the customer experience on the top layer. And that is what we needed to do invisibly. And that is where again we used AI to proactively flag off any sort of any anomaly detection which is there, or any sort of a issue that could have crept up from any
What about customer complaints? That's going to be the key point where the relationship between the customer and the bank comes into focus, because acquisition is one thing. The question comes of when the customer is dissatisfied with, say, a particular point and wants to address it with the bank. What happens then? How do we address that? That's also an important question. We'll get in Topendra's view on that later on when we extend the conversation. But meanwhile, Milan, we were speaking earlier about the banking universe itself expanding, and as more parts of the unbanked population become first-time users of formal financial services. Now, catering to this new customer base comes with its own set of challenges. The target customers for small finance banks, for instance, are largely low-income households with, say, limited access to education. So, what role can technology play in upgrading the overall customer satisfaction index of this user base, especially in overcoming the trust deficit, which, say, might stem from unsatisfactory experiences or unreliable redress of issues? Because we have all been talking about financial inclusion and we are speaking about the spread of technology, but we also need to see how this technology helps banks reach out to newer customers who themselves require a new thought on CX, on approaching them. What's your view on this, Milan?
Yes, I think there is a massive opportunity in the even for the larger banks which are here, or so many fincare smaller financial banks which are coming into play. I think first, from a relatability point of view, is, in my view, vernacular is very critical. That you communicate and engage with the customers ideally in a language they are comfortable with, and the technology which you can put. Even simple things such as when they are filling in certain information, document, etc. So that I would say is one part. I think videos seem to have done very well. If I take it a little bit of a cross section view of industry, that where you have a video interaction possibility, given the spread of 4G, you referred to 5G earlier, even in semi-urban areas today, and if you're able to integrate video as a part of your processes, whether it is KYC, whether it is approval, whether it is a subsequent fulfillment, grievance management, etc., etc. So that's the second part of technology which kind of comes into play. And I think the third, at least, and I'm sure that others will have their own experiences and views, is in terms of the the ease of process. I think. Historically, what used to happen is that when you had a physical presence in many of the organizations, I think nobody had paid attention to the data you are seeking, the steps you are putting in place, and then you are completing a transaction or a flow. I think given the recent times, some of the companies have completely challenged those existing templates or existing processes, and have tried to say that can I get as little information as possible from that interaction, and the rest I can glean from so many other areas. There are some great examples in India. I can talk about retail sector, in of course banking, and I'm sure many of the banks here will be doing something very similar. Insurance today, that your customer satisfaction is that where on a 10, 12, 15-minute transaction, you are giving endless amount of information, which anyway is available in all the other source of information which you or accompanying documents you are providing. So those are kind of views, vernacular, video if wherever possible, and then probably simplifying your engagement template, so to say, I think that's where you probably engage much better with this entire new class of customers which are getting into the banking system. Gautam, I think you're on mute now.
My apologies. Yes. So extending that conversation, extending the point that you mentioned in terms of workforce productivity, then when this customer base gets tapped, how do investments in RPA compound over time and help improve productivity, especially for the front office now, and help them engage with customers in a richer way, considering, the new normal of online banking? So if you can give us a ringside view of the options which are available.
Very, very quickly, and I'm sure again, Haresh or Murli or Tupendra will talk much more. I think the one thing which has happened is that you have limited capabilities or bandwidth available to service your customers, and if you are able to pre-call and post-call are able to automate and move a lot of that activities to machine, I think that allows you for more time for customer interaction, upsell, cross-sell, and so on and so forth. So that is the front office part of it. The second is that if you're able to again, globally, telecom industry has done a great job. Is that simplifying the processes, right? So when you do a KYC, when you do a recharge, and I think I'm not saying that bankings have not done it, but banking, because of underlying regulatory reasons, I think sometimes take a little bit longer time to completely change the processes and what you ask per se. But front office, fundamentally, using automation, using robotics and others, you are creating a lot more. You're creating time and getting them to do the productive engagement interaction work versus doing the administrative processing kind of work.
All right. Now, when we are talking about businesses, we also need to talk about ROI. So let me get in, Murli and Haresh's perspective on this. Banks, of course, need to meet revenue targets, improve customer experience, meet regulatory norms, and at the same time reduce costs. So how can a digital workforce help in reducing costs and improve overall efficiency levels? Haresh, we'll come to you first, and then Murli's views on this.
Sure. I think before cost optimization and ROIs, we need to understand that robotics or any technology is helping us mitigate a lot of risk, and which comes with any manual interaction or a broken process. And what banks have realized, or we have definitely understood, is that if you have a broken process or if you have technology investments, we would definitely look at ROIs and cost optimization. But before that, customer experience and risk mitigation is prime for us. And from a ROI perspective, definitely we look at a year window for any investments that we do. And what we've seen is that the front end or the back end have learned to live with digital workers, and they're more happy to live with them and work with them as partners because finally the front end and the back end workers are doing much more qualitative work now rather than quantitative routine tasks, which are managed by their co-digital workers or colleagues called digital workers. So that's the I think mantra that people are now opting for.
All right, Murli, your view on this?
I agree with Harish in terms of the risk component that gets reduced, a lot more from an automation. But if you look at the automation has got two sides to it. One is in terms of automating a process which is otherwise being, happening on a manual intervention because of a disparate system or a legacy system with respect to a digital system, etc. Second side of the coin is in terms of with the kind of a data that is available, are we able to do a cognitive intelligence? Are we able to do some kind of a decision making tree analysis and then take the next decision for the customer as part of the journey? I think these two are two important items. From the first item in terms of getting bringing automation in terms of executing the overall chain of things, that's going to give you a multiplicity factor of revenues. I mean, in terms of man hours, an activity which is happening, x number of x person hours, etc., gets completed in a fraction of that, right? That's a you can always create a dollar value for that. And second is in terms of taking some more decision making or decision branches, right, which will help you to do a cross sell and upsell. So a part of frontline activity also goes into that, and that becomes a exponential figure for you, because the data that is available and which is otherwise humanly takes longer amount of hours to really come out and see whether we'll be able to do a cross sell or an upsell over there, right? So that comes handy there. So in both the perspectives, the number of the way that it gives you a return is exponential in nature. It all depends on how many processes are you able to do an automation, and how many processes where you are able to bring in the decision tree analysis as part of your automation strategy. I think that's the key differentiator any industry or any bank would eye upon.
Point taken, Murli. All right, we're almost out of time, so let me come to all of you for summary statements in a differentiated manner. The question I have is, from an innovation standpoint, what will be the focus area for banks in this decade, and what's the next level of RPAs going to look like? So with regards to the question on banks, let me come to Topendra first, and then we'll get Haresh and Murli's views. And Topendra, in terms of the innovation that is coming out, what will be the focus area for banks this decade?
So I think in today's date, many of us legacy banks, are compartmentalized, and the harmony and homogeneity of the data does not exist in today's date in most cases, and there are various compartments in which this data exists. So the most important and critical item would be actually harmonizing this data. More and more data will be visible and seen, and once the harmony of this data is achieved, is where you will see many things which will emerge, which will be in superior in quality, better efficiency, better quality of risk management, and so on. So all those things will keep falling into place more and more, as in how you can see the the visibility of customer interactions improving by the day based on how much you see of that customer, and that is something I think is critical.
All right, Haresh, your summary statement looking at the crystal ball, from an innovation standpoint, the focus area for banks in this decade, what's your view?
I think the focus area will be embedded ecosystems and agile tech, whether it's cloud or edge ready. But that's the innovation component that's going to come, whether it's through IoT, 5G, you name, and the technologies can be multiple in nature. What I also see, robotics 2.0, which is already, if you see RPA 1.0 was purely where data was being transported. Now RPA 2.0, or ideally now RPA 3.0 will actually start working with ML and AI and other techs on a hyper automation platforms. I think that's going to give the bigger use cases for innovation.
All right, I'll get in Milan's response to that. But before that, I'll get in Murli's view on, from the innovation point of view, the focus area, what's that going to be?
I think from an innovation perspective, the focus area for the banks are going to be, in terms of putting mobile first, because that's what is where you're going to have exponential customer growth, because the bank is in the hands of each of the customer. Second is personalization, with the ecosystem growing with UPI 2.0 or API banking or API aggregators, account aggregators, etc. So there is a marketplace that's getting created. So personalization using those marketplace is what is going to be a differentiating factor for the services that are going to be offered by any bank. And the third is, I think cloud first has gone away. Now it's like cloud native. So we need to have the we need to have the applications to be cloud native in nature. Because the way the industry is going, I mean, you would have seen it. The UPI, when it started, and now I think we have hit about 6 billion transactions or something like that in last year. So the kind of a scale that it actually pushes you, it becomes too much of an expensive to manage such kind of a scale within a data center, right? So I think the cloud native is something that I would seriously think that will be an item for us to take it into consideration.
All right, focus on the cloud. That's Murli's point of view. Sum it all up for us, Milan. As Harish said, the era of smarter RPAs is what they look forward to. What's the next level going to be for RPAs, in your opinion?
I think I'm glad that Murli spoke about cloud native. I think the scale, benefit, the speed, and especially a country like India where the time to market are becoming even more shorter. Just the sheer intensity of competition demands every organization to it. So I would say probably three big things are cloud native play. What Harish said, that AI getting embedded. Not all AI may come from the same OEM partner. It might come from multiple partners, and you take it for the play. And the third, probably even Topendra referred to and Murli referred to earlier, is that how do you integrate data in your process? Because even today, as he rightly said, that data is still in silo, although there are multiple technologies, and data and process are still a separate place. So how can you get data and process together? And how RPA or any such technologies can play a role is where I see significant productivity stroke kind of customer experience benefits there.
All right, on that optimistic note, we come to the end of this discussion titled Taking the Next Leap, Transformation to Enhance CX and Combat Security Challenges, as part of the Winning with Anti Fragility series, brought to you by Mint in association with Automation Anywhere. Thank you to everyone on the panel for joining us with their insights on the topic. We'll be back with another session very soon. Thank you to the audience that is also watching this series. Keep tuning into Mint. Meanwhile, this is Gautam Srinivasan signing off.
Thank you.